And for more on the topic of free trade zones, we're joined by Ankur Patel, live from Birmingham in the U.S. state of Alabama. He's the co-founder and chief investment officer of R-Squared Macro Management. Thanks for joining us.
Thanks for having me.
Ankur, 7 new free trade zones being announced nearly 3 years after the launch of China's first one in Shanghai. What is the significance of the expansion?
This is fairly big news for China. I mean, I think Shanghai in 2013 was more of an experiment. That experiment actually was very, very successful. What it allowed China to do was it allowed China to attract sticky foreign direct investment, which will help stem the outflows in capital that it's seen over the last year. And in particular, as you mentioned, these new free trade zones happen to be in inland provinces, areas generally with much slower growth than the coastal provinces where a lot of the free trade zones already exist.
Is that the reason that these particular 7 regions have been chosen?
It is. For a long time, the inland provinces were always laggards. They were seen as the Rust Belt in China. They weren't really a place for a lot of innovation. A lot of FDI did not go into those regions. A lot of the capital just flowed into the coastal zones. Really, the intent of having the free trade zones become more of the inland provinces in this expansion is to make sure that the growth there is still very much intact, especially because China's undergoing this very long and lengthy deleveraging ever since 2011.
So have the other free trade zones proven to be successful in openness to foreign investment and then fewer restrictions on capital flows?
To some extent they have. I think China still struggles from a couple of things. Certainly a lot of the human rights practices have been called into question globally. That's prevented some multinational corporations from participating wholeheartedly. And the second big issue has been the fact that China corporations generally want majority stakes in joint ventures that they get involved in with foreign companies. And therefore, having a stable, kind of open and transparent business climate has been difficult to achieve. So definitely this is scratching the surface in terms of what can be done. But so far, it's been pretty successful since 2013.
And which multinational corporations stemming from which geographic regions in the globe have been participating most actively in these free trade zones?
So a couple of deals come to mind. More recently, Volkswagen actually announced a deal to participate in China to develop electric vehicles. That announcement is certainly very, very big news for China. It allows Volkswagen to participate in the consumer market within China in a way that it wouldn't have been able to had it not entered this free trade zone agreement. But again, I think corporations such as Baidu come to mind. They have had such a great success on the e-commerce side. And e-commerce in generally is one area that China could see really blockbuster growth over the next couple of years. And this is one step forward towards that.
Well, you mentioned e-commerce, and staying with the tech theme, Hubei is focusing on building high-tech bases. What can we expect there?
Yeah, it used to be the case where China was really the foreign direct investment that went into China was in materials or heavy industry or low-end manufacturing. Nowadays, though, the free trade zones will be primarily focused on high-tech industry, and the deals that you've referenced certainly cater to that kind of aspect. It just generally means that China is not really focused on some old school industries. It's really focused on some of the higher end markets, as you mentioned, and we see that as the biggest avenue for growth.
Ankur, how free is free? What more needs to be done in really opening up these free trade zones completely?
Again, from our perspective, a lot needs to be done. We're still not in a complete. These are free trade zones. They're not completely open areas where multinationals can come in, have majority stakes in businesses, and operate very freely. But it's still a huge amount of progress from 10 years ago, when for multinationals to come into China, they needed to go through a lot of hoops, a lot of regulatory red tape to be able to operate. Now it's much, much easier. They could enter these joint ventures with Chinese corporations and then participate wholeheartedly in the Chinese markets. I think this is just phase kind of 1 or phase 2 of the structural reform agenda that China has. And over the next 10 or 15 years, if China continues to liberalize its economy, then you will see a much more open market for China.
All right, thank you so much for your insight, Ankur Patel, co-founder and chief investment officer of R Squared Macro Management.